everybody, welcome back to another episode of our Study Wealth podcast. This is the sort of year-end sprint 2024 sort of series that we're doing, and I am super excited to have, at this point, I'm going to call you my friend, Eric, because we've spoken several times, Eric McArdle of Simplify, and a lot of you guys that are listening to this, or you're over on the Study Trader, or listening to ours on YouTube, you've probably heard a discussion or two between Eric and myself. Always a pleasure to have you here, Eric. You guys run a whole bunch of really interesting ETFs, and I mean that. That's actually why I initially reached out to you guys about a year ago or whenever it was to start these conversations. What's on your mind right now? What are clients asking you as we kind of round off 2024, heading into or looking towards 2025 maybe? Obviously, we've had an unbelievable equity year, the S&P, depending on when you look at it. Yeah, I was looking at it I think about a week ago, Eric, and the S&P was up 40% year over year, or a week and a half ago. Maybe we're up 28, whatever, year to date, and whatever it is, it's big. And so, obviously everyone wants to be in stocks. Everyone wants to be in stocks that are as sort of much upside potential as possible. What are you seeing here? I'm just gonna open it this way.
Serge, well, thanks again for having me and great to see you as well. We're seeing the same thing, right? So a lot of what we do at Simplify is focused on providing different exposures across different asset classes, right? And so that can be stocks, like you mentioned, but it can also be fixed income, alternatives, commodities, et cetera. And what we're finding is that most people are really looking at the stocks, right? And these are professionals, they're advisors, institutions, but they're also individual investors too. And the overwhelming majority following the November election, and really, I think the kind of the calming of having a uncontested election, right? Something that came out to be, fairly quickly in the market, fairly quickly in the results, and gave the market a lot of confidence to take risk right after that. We're seeing people now kind of chase into the end of the year, right? You mentioned the equity market, the S&P 500 up almost 30% this year. If you were underweight stocks heading into this, and you're a fund manager, for example, you're looking at your last month here and saying, this is the home stretch, right? This is where I can put up the annual numbers. And if I'm not participating, I'm in trouble. So again, we're seeing that, and then we even see it in other risk assets like crypto, right? So cryptocurrency has seen a really strong surge. I think not only on the back of the risk taking feature of the market, but also on the kind of proposed legislation, the proposed softening of regulatory oversight. From the SEC, for example, and really kind of being more of a crypto friendly administration in the Trump administration.
Oh, it's fascinating, and you and I were just talking before off camera. I just got back from a conference, and of investors, sort of longer duration investors, basically private banks, and typically their time horizon is I'm gonna say at least quarters to years, with making changes along the way, of course, and that's not buy and hold. And they're now talking about putting on a trade for the next 2.5 weeks into year end, and they're saying very open. I've never heard this before. Of 25 years of doing this, they're very openly saying their clients are pressuring them to get into riskier and riskier assets. And
Yeah.
and so I think that kind of reflects where we are. Nevertheless, we should say, and this is not to be Debbie Downers here, that there's opportunity. And
Sure,
I think
sure.
that's what you're alluding to as well.
Yeah, there's absolutely opportunity. And I mean, I think if you kind of think back to the idea that risk assets, that the stock market generally goes up, right? You need to participate in that to do well for long-term wealth building and accumulation, right? And so it's not a matter of, whether you should own stocks, in my opinion. It's whether you should own, stocks at an overweight position, or whether you should take on leverage, or if you're going to have higher beta exposure into things like crypto or tech or whatever, how do you do so in a way where when that left tail or when that major drawdown or shock happens, you're not going to be in so much trouble that you wish you had never invested that way to begin with, right? And so a lot of what we do here at Simplify is say, hey, we know there are times to take risk. If we're in those times, which again, probably the majority of times, how do we build products and exposures in a way that's intelligent and that's mindful of the risks and helps people kind of stay the course as opposed to, getting that knockout punch thrown their way. And then I don't know, Serge, if you remember, but after the financial crisis, 2008, there were some investors who, lost 40, 50% and didn't get
Yeah.
back in the market for 5 or 6 years. Right. So that's the type of event or the type of move that you can't get into. And so you have to look at yourself in the mirror and say, honestly, what kind of risk can I handle? And, if I'm down 10%, am I going to be losing sleep at night? Or do I, have a much higher tolerance for pain? And then you need to build a portfolio accordingly.
And that's what I like about you guys is, you build these products with risk in mind, right? Risk and opportunity. Whereas you look at, other products out there, it's really just what's the level of YOLO and FOMO that I can expose myself to. Yeah, but I think and that's really the purpose of what I'm doing. And I think you guys, like I said, you guys have that in mind as well. Obviously, we can't prevent that from happening to everyone. I am convinced we're going to have another period like that. A lot of people are going to lose a lot of money, and those are the people that are now buying, 2 times MSTR ETFs we were talking about before. And it's going to happen. It's going to happen for a lot of people at the worst time in their lives. A lot of baby boomers are, I see what they're doing. I can see it, And so we're trying as much as possible to prevent that, yet participate in as long as while the party continues. It's, arguably a game musical chairs in some parts of the market. But yeah, that's kind of where we are. But I know, listen, I know I actually reached out to you about a week and a half before, yeah, a week and a half, whatever it was, because of an email I saw from you guys. And I wanted to touch on, again, some of the thoughts you see here and a couple of particular ETFs that you've had for a while, some that you're launching. When I'm getting into that, just real quick before though, as always, just as a disclaimer, I'm not paying Eric. He's not paying me. We're just a couple of dudes talking markets here. So just to be very clear, this is not a promotional thing in any shape or form from a paid perspective. So anyway, Eric, let's look at some of those ETFs.
Sounds good, Serge. Well, I think in line with this risk on and the FOMO and doing, risk on intelligently, one of our favorite ideas right now is the Simplify US Equity plus Bitcoin Strategy ETF, ticker SPBC. And this is a fairly simple concept. We launched SPBC back in May of 2021, and we were really one of the first ETF products out there to incorporate the use of Bitcoin and cryptocurrency. This, well predated the introduction of spot Bitcoin ETFs. It even predated the introduction of futures-based Bitcoin ETFs. And so the idea here is to say, okay, well, if you have an interest in crypto or Bitcoin, but you don't necessarily have an understanding of the technology, you don't necessarily want to trade this thing, but you know that it's something interesting and can potentially have, I like to call Bitcoin the ultimate Rorschach test, right? For some people, it is a currency hedge. Some it is a digital gold. Some it is a way to get assets out of a tough situation if you're in a tough country and going through geopolitical challenges. Some people it's just a number go up investment, right? It's a momentum trade. And so regardless of what your view is on that, we think that by adding Bitcoin to an exposure of 100% S&P 500 or 100% US large cap equity, that we can run this as an overlay of sorts and then rebalance the Bitcoin position periodically, right? And so the way that we do this, and I'm going to just scroll down to holdings, right? It's very simple. We use an S&P 500 ETF from iShares, so incredibly low cost and liquid, one of the largest ETFs out there in the market. We then use treasury bills to collateralize an S&P 500 futures position. And this is what gets us effectively to about 100% exposure across all holding periods for US equities. What we then do is we own about 10% in Bitcoin ETFs. Typically, we're going to own the low-cost Bitcoin ETF. So this is BTC from Grayscale.
Yep.
And what we will do then is periodically rebalance that position. So if the Bitcoin component rallies substantially and becomes a larger weighting, you would expect to see us rebalance it, harvest some of the gains, and then go back and buy, the market really. And then from the other side of it, if let's say Bitcoin had a period of underperformance and that weight became much lower in the portfolio on a relative basis, as we rebalance, we'll go and add and kind of buy the dip, right? And so this is super important because if you look at the volatility of Bitcoin, right, which is really why you own it, but the volatility cuts both ways. So the last 3 years, the price of Bitcoin has, from its peak, fallen about 75% before then rallying, call it, 150%. And I guess this goes back to the point we were making earlier is like, well, do you have the confidence to ride this wave correctly? Do you have the skills to do it? Right? If not, maybe you should think about this more from a strategic perspective. And what SPBC does is it allows you to effectively buy these dips, right, in a strategic portfolio and then sell the rip, right? And so when we look at SPBC against the S&P 500, shown on screen here, SPBC in white against the S&P in red, you can see the performance profile, right? And so during periods of Bitcoin bear markets, you're going to lag the market a little bit because your overlay is trailing, right? But as you come out of that and as you come out of that accumulation phase, you participate quite strongly to the upside. And again, do so in a way where you're not taking too much overall portfolio volatility. So we like this one a lot. We think that as people continue to look at crypto as a more of a permanent position in an investment portfolio, but don't necessarily want to custody at some of the other places like Coinbase, or don't want to trade it individually via standalone ETFs, SPBC is a really good way to do that. And just as a kind of a closing here, Serge, so when you're thinking about using this in a portfolio, because you've got this 100% equity and then 10% Bitcoin piece, you can kind of think about it and say, well, if I'm running a 10% position in US stocks, I can now use a 10% position in something like SPBC and have 10% in stocks and then 1% in Bitcoin,
Yeah.
right? So there's a capital efficiency component to this exposure.
Yep. And no, I think it's great because at the end of the day we're looking at risk on assets here in one bucket, so to speak. Two quick points, and just for clarification. One, this is not like we see there is still momentum in the market. So that's actually when I saw this, and I was not aware of this ETF of you guys, but it didn't surprise me in the end that it came it's a creative idea, came from you guys. I thought this would be great way to talk about. But let's also talk about the risks, because we do want to see both sides. What if we were to go into some sort of a sideways to down market in equities, and then at the same time in let's say Bitcoin, because obviously there's a high correlation there in terms of risk on how, I mean, clearly it's not going to go up like crazy. How do you kind of talk about that ETF then? And obviously there's an ETF, this doesn't have to be held forever kind of thing necessarily, but
Sure.
yeah, risk management.
Yeah, I mean, I think in periods of, range bound trading or downtrends, risk assets are not fun, right? Because you're relying fully upon the capital appreciation component to generate return, right? There's no dividend here, not a meaningful one at least. There's no, carry profile. You're not receiving real cash flows other than the underlying, S&P 500 stocks. And so you have to think of this as a capital appreciation asset. And so maybe just as a kind of an additional piece of perspective here, when I take that chart that we looked at a moment ago and I add Bitcoin on top of it, right? So I have the Bitcoin index here in yellow. You can see that in periods where the S&P in orange is trending lower and the Bitcoin is trending lower,
Yeah,
SPBC is going to be trending lower too. And so
sure.
I think in a
Just
range
not as
bound
much.
environment, exactly. It's all a function of saying, okay, how much juice or how much octane am I going to have in my exposure, right? And if you put your whole portfolio in crypto in the last year, you'd be a pretty happy camper. You put your whole portfolio in crypto at the end of 21, that would have been a really tough time. So it's just a function of saying, all right, how do I do this in a way where I can sleep at night? And to me, that's what's most important.
Fully agree. Fully agree. Um, one of the things that you guys always do that I think is so smart is kind of focusing on that income component. Um, let's talk about that a little bit because there's when you look at a portfolio or even if you're looking at it as a trade, it's nice to have something that gives you momentum exposure, which is essentially kind of what we're looking at here um, with SPBC, the ticker symbol. But let's talk about some income stuff as well. I know you've got obviously a lot of product. You've talked about some of them in the past, but maybe also kind of recently or forward looking. What are you guys seeing that's exciting out there that makes sense and not exciting just for the purpose of excitement, but like that makes sense and where you're seeing demand from forward looking investors?
Well, two ideas come to mind. I mean, the first is kind of along the same vein that we were just discussing in our Maxi ETF, MAXI. What Maxi does is it owns Bitcoin outright. So this would be for the person who wants to, really go all in on crypto, but we run an option overlay to generate an additional yield that's paid out monthly there. And so I won't spend a lot of time on that because I want to shift gears a little bit. But for those who are interested in this risk-on approach, I view Maxi MAXI as a way to get paid while you hodl, right? In
What
the
is there a
crypto terms.
specific yield? And obviously, I'm not holding you to anything forward looking, but historically, what's been the yield on that kind of thing on an annual basis? Do you have, and not John trying to throw you off here if you don't know.
No, so it is high single digits typically.
Okay.
And the reason I say typically is when we go through periods where the underlying Bitcoin does very well, we will pay out some of those realized gains as income. So right now, if you look at the portfolio, the distribution yield is very, very high. I would say historically it has been, and I can again just kind of calculate this here on the back of my hand, but high single digits is about what you should expect from the option overriding component. And we run that option overlay in a way where we're not capping your upside in the Bitcoin beta.
Yeah,
We're really, doing more of like diversified equity put spreads, things that can generate income in a way that doesn't impede your Bitcoin beta.
gotcha.
So yeah, high single digits is the target for that,
And
and what we
is for
paid out
this
historically.
just give people some idea. Is it typically you guys are selling put spreads, or would you also sell call spreads if it's more of a prolonged? You go both
Put
ways.
spreads. Most of them are going to be on equity indices, so think the S&P, the Nasdaq, the Russell. But we'll also sell potentially puts or calls on treasuries like TLT, long duration treasury bonds, or put options on like commodities, say gold, for
Okay.
example.
So the
But
options
most of it,
trades are not being done on Bitcoin. They're being done elsewhere for generating income. Okay, gotcha.
correct. Yeah,
Perfect.
and so that makes it
All the
very
better, right?
different.
So there's less
It,
correlation. Yeah.
Exactly. And in my opinion, again, you own that asset so that when it goes up 100%, you participate, right? Whereas if you're selling calls on Bitcoin, like some of the newer products, and there's nothing wrong with this per se, but what you're doing when you're selling a covered call is you're turning your underlying into a bond, right?
Yeah.
And so that's fine, but I own high vol assets so that they go up, 10x. I don't own them so they go up 2x and then I clip a coupon off them. That's my opinion, but again, like it's whatever works for you.
Agreed.
So
Agreed. Anyway, so on the topic I think that's a wonderful idea, by the way. I like the fact that you're combining Bitcoin, and again, obviously not everyone likes Bitcoin, but it's for those people that like the idea of a diversified exposure, and then actually using options in different markets with that. But I know you. I think I cut you off before in terms of looking at more sort of income in general. What else is on your mind?
the other one is the total opposite from Bitcoin. It's very boring, but that's why we like it,
Yeah.
right? So treasury bills, so short-term government obligations are still very attractive, right? They don't have any duration, so they have no volatility when interest rates change. They have no credit risk, and they're yielding about 4.5% right now, right? So you can park your money in a treasury bill and have it, very secure, backed by the full faith and credit of the U.S. government, and get a 4.5% coupon. Great. What we do in our strategy, Buck, BUCK, which is the Simplified Treasury Option Income ETF,
Uh-huh.
is we take a base of treasury bills and then we look at the option market in fixed income and sell options around basically key rate levels, right? And so the bond volatility index, or bond market in general, has been very volatile in the last 2 or 3 years. Contrast that with the equity market that's been very sanguine. The amount of premium or the amount of income you can generate by selling options and fixed income is fairly attractive relative to historical levels. And
So
so in
Buck
Buck,
is up like you know 1 3/4 as much as T-bills, like 7.5% if you if you lock in the dividends. That's a
yeah,
good move. With is it T-bills based or?
yep, all T-bills. And so we're aiming for about T-bills plus, call it 200 basis points a year.
Yep.
So far, so good. And paid monthly, right? So
Nice.
right now the distribution yield on this is about 6.8%.
Yep.
And so if you need a place to park conservative assets and generate yield without taking any credit or duration risk, Buck is one of our preferred strategies right now in the market. Of
Love it.
course, not investment advice, but for what it's worth.
Sure. No, it's just none of this is advice, neither from you nor from me. It's just ideas. But I think, again, what we're looking at here is, as you say, this couldn't be any more different, these two things we just talked about. But that's kind of the point, right? So if you're going to play on something as high vol as, Bitcoin, and this is assuming it's not a, what is it, laser eye thing where you just kind of forget that you have it and wake up in 50 years and it's at wherever. It's more you will be somewhat risk averse. It's always nice to know that there's something on the total other side of that as well, like Buck, right?
Yep,
Just purely income. I like it.
100%.
Okay. So what about some? I know you mentioned before there's one or two things that you are that you literally just launched, and what I'm trying to get to is what because at the end of the day, when you have an ETF, you launch it because you think you have a great idea, or an investor, a big enough investor, has a pretty high conviction. Otherwise, it wouldn't get that way. Is there an example or two you can give us on that?
Sure. So we are fairly progressive when it comes to bringing product to market, right? So the things we've talked about are kind of unique. Um, Two of the new ideas that we just brought to market actually today are a small cap fund, SCY, where we own the S&P 600 as an underlying, and then we run that same option income overlay that I described earlier. We run that on top of the small cap index, right? And so we're finding that a lot of folks who are looking outside of the large cap space are, in the past couple of years, like that's been detrimental, right? You've wanted to be in large cap US stocks, but if you're kind of looking at, these record valuations, if you're looking at this huge run up that we've had and saying maybe it's a good time to start diversifying across different areas of the market that maybe haven't performed to the same degree, we want to give investors a way to do that, but we also want to give them the income to say, hey, if, to your point earlier, if an asset stays range bound for 12 months, 24 months, et cetera, is that capital put to work in a way where it's productive, right? And if you just own a price appreciating asset that doesn't appreciate, then that capital is not productive, right? So we're combining the capital appreciation component with this income, carry component, and we think that that is something that investors will gravitate toward. So that's SCY.
Yeah.
And then the other one we launched, this is pretty interesting. So kind of combining some of the concepts we've described earlier. It's called YGLD, and this is a income strategy that owns gold as the underlying, right? And so we have 150% exposure to gold using futures, and then we run that same income overlay. And so, we're hearing a lot of folks looking at gold, looking at the price
Yeah.
action that gold has displayed in the last year or two and saying, okay, I want to participate in this, but again, like, am I too late, right? Or am I at a point in this run up in gold where I need to be sensitive to valuations here? And so by adding the income overlay, we think that makes the exposure much more palatable to own across different market cycles, right? And so again, thinking about ways where you want to have different assets or different exposures in the portfolio, but a lot of times if that asset is not productive for a period of time, you start to lose faith in it. And so the income overlays that we're adding on top of these betas should help investors stay the course and kind of generate additional income during the periods that are less exciting for the underlying.
I fully agree, and I think as sort of almost a closing point here, allow me to share my screen quickly. Sharing the screen. Let me share my screen here. Here, just to kind of do your point of assets that may not be productive. This, it's just to kind of get people's head around it. This is the S&P 500 from 2003. Sorry, the year 2000 to 2013. Now, obviously, there were big swings within here, but the S&P topped in the year 2000 in April. I remember because I had just graduated college a few months before, and I was trying to get into investment banking, and both banks that had given me offers rescinded them because of the internet bubble burst. Anyway, side note, as I remember that well, but for 13 years, the S&P didn't go anywhere. It's inconceivable for people to think about this right now. Like, so unproductive asset, two big secular bull and bear markets, cyclical bull and bear markets within this. But that's where something like you're talking about on a single stock or in a gold or whatever it is, that makes a lot of sense. So, and I just thought I would put a little bit of a visual on all this. Eric, thank you so much. I appreciate you joining us here in